Hello, everyone. Hello, Financial Literacy for Beginners Facebook group. We are so happy to have you here this evening with us, or wherever you are. It might be midday for you. I don't know, but it's evening here on the East Coast in the U.S. And we're here with my special guest, and we're so happy to have him. He's a great entrepreneur. He's a macro investor, a lot of experience in the financial markets. He's worked a lot with institutions, and I encountered him because I'm one of the customers for one of the products that he just came out with, and just loved it. So I'll let him introduce himself a little bit more and tell him a little about what he's doing and where his background in more detail, and then we'll have a conversation. So if you have questions for David, please post those in the chat. I will be monitoring that. If anybody does have a question, if you catch it live, if you catch it on the replay, just drop your question in the chat, and that's okay as well. So David, introduce yourself.
Sure. Thank you, Kenan. Appreciate you having me on with you. Love what you're doing. Huge believer in financial education. And I think what you're sharing with folks is really powerful. So for those that are watching live, my name is David Dorr. I'm the founder of Coro Global. Coro Global is a fintech company headquartered in Miami, Florida, and we're in the business of financial transactions, financial payments to be specific. And what we've created at our company is a company that allows you to transact and settle currency instantaneously. But most importantly, it's with the ability to transact and use physical gold. And the reason for that is my background is 25 years in capital markets and fintech, with a particular expertise in global macroeconomics. And if there's anything that my career has taught me is that the next financial crisis is around the corner. And one of the best ways to be prepared for that, and what we're going to need to do on the other side of it, is we're going to need to return to stable money. And while there's many alternatives out there, there's also a lot of confusion when you're looking at cryptocurrencies and everything else. And gold served humanity for 5,000 plus years. And so we built Coro to be able to give people stable money, whether it's now in preparation for that crisis or to rebuild with their communities afterwards. And so that's what Coro is about. My background, like you said, is capital markets and fintech. And I'm just pleased to be here with you guys and happy to jam with Kenan.
Thanks, David. Really appreciate that. And, you guys, David has an interesting story. We were just chatting before we came on live here. And he got started in financial a completely unique way. I've never heard anybody else come into the industry this way. And then he's also use that knowledge to work with institutions. So tell us a little bit about how you guys started in the industry here.
Yeah, definitely. So my financial career path definitely different than most, an unorthodox path. So I was born and raised in the Midwest in Missouri, and started tinkering around with trading commodity futures when I was 16. But the real defining moment in my career, I was working in a restaurant for a Greek family growing up. And these families, if you've been around Greek families, or we got Greeks in the audience, I love your passion for gambling, right? It's a huge passion. I found it across every Greek friend of mine I've ever known. And so growing up around that environment, I learned the mathematics that go along with gambling, specifically with playing craps. And the way I learned that was the hard way, like most people do. And what happened was I lost an entire paycheck worth of salary for a week playing craps with my bosses. And I lost it in about 5 minutes flat. And I thought, well, I'm an idiot. That's what I get for gambling and playing dice and just betting my lunch money, right? But what I noticed over the next couple hours was I noticed that my boss was just steadily winning. And it occurred to me, I said, well, one of two things is going on here, right? Either this guy's cheating and these dice are loaded, but I don't know this man to be a cheater. He might be a gambler. He is definitely not known as a cheater. Or there's something that he knows that I don't. And this was a pivotal moment in my life, because what happened was the next day I went to the public library and I checked out all the books on craps, and then including a couple books on blackjack. And it was blatantly obvious. It's just basic probability. And it's the same math that casinos use to make their money. And when you're playing on the streets, you can kind of behave like you're the casino. You can tilt the odds in your favor. And that led to an incredible journey learning about bankroll management, risk management, odds, and all these things, which are still the exact same things that I apply today, managing customer funds as a portfolio manager, being 2.5 decades in the space. So yeah, very unorthodox way. It's college dropout and not the normal path. So yeah, pretty cool foray getting into the financial markets.
Yeah, that's a pretty unique story, and I thought it was it reminded me of just kind of like the mentality a lot of times that's required to actually be able to be a trader. Like if you're actually
Yes.
a trader, that it kind of does require that knowledge of numbers really, and it's interesting how you broke down kind of like gambling to that and were able to be successful doing that, and then take that same kind of mindset to the markets and then be successful with that. That's pretty cool.
It's funny. So I actually failed algebra when I was in high school, completely failed it. I thought, I must not have any brain for mathematics. Lo and behold, as a teenager, you start making money playing dice, understanding probabilities, and you practically become a statistician overnight. So it's when the right motivation meets the right education, it all just sticks. So that taught me a lot too. And we were talking about this earlier as well, that really highlighted the importance of self-education in that, whether you take a traditional route, as I mentioned, college dropout, and whatever your path in life, education is just the cornerstone of that. Whether you self-educate or not, education is got to be a key piece.
Absolutely, absolutely, and that's what we're here at the group, Financial Literacy for Beginners. We do a lot of real basic stuff about compound interest and learning how to make sure that you're planning how to plan and create your plan for financial security and financial independence. And part of that, we don't really get into the advanced topics. So, but we're happy to have you here because you can
Sure.
shed some light on some of those advanced topics like macro investing. Tell us a little bit about what you think about, the macro market and how that perspective has shaped, or can be useful for people, and maybe just kind of where we are currently with things.
Sure. So I'll tell you one of the things that's related to compound interest, interestingly enough, and I'll give a good example of this. The human brain, one of our edges in trading that we use a lot, and it's relevant to the example I'm going to give, and it's also relevant to this year. So the human brain is not designed to think in exponential terms. We think on a linear projection. And this is logical, right? Because if you and I are running from a lion that's chasing us and we got to, jump over a cliff or something to get away from it, you need to linearly extrapolate where that lion's going to try and get you, right? Exponential thinking doesn't really help you. But exponential thinking in markets and making money is extraordinarily important. And compound interest is a great example of that. One of the examples I like to use with clients is that if I were to come to you, Kenan, and I say, listen, I've got a proposition for you. I'm going to give you $100,000 cash in a suitcase right now, today, or give you the value of a penny doubled every day for a month, 30 days in a month. And, our brain just struggles, it's a trick question, right? Because
Right.
The whole fact that it's being proposed, but most people would absolutely, utterly fail. They know that it's not the $100,000 in the suitcase. The penny must be worth more at the end of the month. But most people never, ever calculate how much. It's $5.3 million. And if it's a 31-day month, that's $10.6 million. That doubling every month. So if you double a penny every day for a month there, that's really, really, really powerful. So what we look for in macro is we look for situations that, whether on the upside or the downside, have some type of compounding effect. And a great example of this in macro, like we killed it at the beginning of this year. We absolutely crushed it. We were short everything around the world. Now, the reason for that is because when we started tracking the coronavirus literally in the end of December.
Wow.
Yeah, pretty unusual, but this is the weird stuff you do in macro. So I've traded around 2 Ebola outbreaks plus SARS. And so this is my 4th pandemic related, trade. And the reason for it, it's not that we're epidemiologists or virologists, we don't have some sort of medical advantage in assessing these situations. But what we do know is that when those things move, if they become bad, they get bad exponentially. And people can't extrapolate that fast enough. And so you usually get policymakers and individuals making poor choices. What have we seen this year? Tons of poor choices, right? So regardless of what you think about the pandemic, it did move exponentially, and that caused markets to sell off, and we were short the whole globe. And so that's a good example of situations in macro that can pay off in a big way.
Wow, that's amazing. Really appreciate that. So guys, if you haven't figured out compound interest, make sure that you learn that one, because see, it applies a lot of different ways.
Oh yes, quick. That's a must have. And the younger you guys are, the more that time's in your favor. Get started now. Get started yesterday.
Absolutely. Absolutely. And you have some experience. We teach 7 money milestones in our group. The first one is education. We do proper protection, emergency fund, debt management, cash flow, building wealth, and then protecting wealth with estate planning. And you have some experience in estate planning. One of the things I thought that was interesting, we were talking earlier, is you have a family office experience as well. And that's actually the name of my team is called the family office team. So it's
nice.
I thought that was kind of interesting.
Cool.
So tell us a little bit about that experience with that, in regards to family offices and estate planning and things like that. We'd love to hear some of that.
Two things that are really important lessons from being around that. Now, so my background's capital markets and trading. So how on earth did a weird trader get a background in dealing with estate planning? Well, what happened for us was that our first fintech company was in the life insurance space. And life insurance in the United States, as you know, as a financial planner, is a big component of estate planning. Most people don't know that, but it's a humongous component of estate planning, because not only because of its protection, but because of the tax planning benefits. And that was the moment.
Wait, say that again.
Sure. Yeah. So for those listening,
I want to make sure everybody's listening to this piece right here. You deal with wealthy people, right? And what do? A lot of life insurance, right?
Tons.
Okay. So, pay attention, guys.
Yeah. And I can say this unequivocally. My brother and I ran and co-founded, we were the largest trading platform for the entire life insurance industry. So I've seen every single estate design and every type of insurance product you can imagine. We used to pull them apart, dissect them, do reverse engineer the actuarial math on them. Like, we used to build them and design them and rebuild them. So I can tell you without any hesitation whatsoever, particularly if you're in the United States, you can, and this is not a plug, Kenan's not paying me, no life insurance company's paying me. I'm completely agnostic to how you get it done. But as a planning methodology, you cannot beat life insurance in the United States as a strategy. And so what really woke us up to that was that, talking about compound interest, if you don't have tax strategy as part of your game, you're just getting killed. Just like, stop. You're missing such a huge component. It's as big as your investment strategy. They have to go hand in hand. So if you're not really conscientious about the way that you're setting yourself up, it's a big difference. And again, that's that compounding. If you're getting clipped at 30-40% on your tax rate, on your portfolio, versus having that portfolio inside a life insurance policy, as an example, where it's tax sheltered, it's a world of difference. It's a world of difference. So yeah, that's the first thing, is that you got to be cognizant. Is anybody like talking about tax? No, it's boring. It sucks. But if you're serious about, building some personal wealth and to have some liberty and freedom there, you got to get on your tax game, or go to smart people that can be on it for you.
Absolutely. No, man, I love that. That's amazing. And so, guys, you need to get on that stuff. If you're not, we're here to help and provide the education so you can do it yourself, or you can work with one of us and we can help you out with that stuff if you don't have anybody to work with. This is why we have experts on, to help you guys also understand there are different things that you need to be doing. And it's not just us telling you this all the time, but, David has run a family office, and I don't know, I've heard of people who've done that, and it's always fascinated me. And so I was like, that's pretty cool that you have. And guys, if you don't know, family offices are typically for people with 30, 40 million plus I would say on if you're having somebody manage that for you, right?
Yeah.
Yeah. So I mean, it's a pretty big deal to have that kind of experience. So um, yeah. So tell us a little bit about. I know we talked a little bit about the your company. You told us a little bit about what you're doing now. Give us a little background on how your company in fintech and what that is going to be doing. What problem are you solving right now with your company?
Yeah, so there's three problems that Coro solves. So our fintech company Coro, the reason we built it was it's basically a 10-year project in the making. We formed the company about 3 years ago. We released our product just recently in August, as you know. You're happy to have you as a customer, by the way. Thank you for that.
Absolutely.
But the problems that Coro solves are threefold. Number one, currency instability from devaluation is starting to spread globally. So what does that mean? Currency devaluation means that your currency is losing its purchasing power. Said differently, it takes more of your currency to buy the same thing. So if it costs you $2 to buy a loaf of bread at the beginning of the year, it might cost you $5 to buy that same loaf of bread at the end of the year. But your salary might not have gone up proportionally to keep up with that. That's inflation. That's the literal monetary Austrian economic definition of inflation. It's very dangerous. Well, last year alone, there were 6 countries that had inflation rates greater than 50%. That's devastating.
What?
So imagine you have $10,000 saved up, and by the end of the year, it's only worth $5,000. Horrible. Now, we tend to think of this as being in countries like Venezuela, right? So Venezuela has been in a prolonged currency crisis with hyperinflation for many, many years. Zimbabwe, classic case. Yugoslavia before that. I mean, we've seen the Weimar Republic, in Germany. So the history has shown this happens over and over and over and over again. And the root cause of this is when central banks and governments, they just keep printing paper. And so this is now we're reaching this acceleration phase, which has us very concerned. So we believe that this is going to implode. And it's one of the reasons people look at crypto and everything else. So the first problem we're solving is giving people an alternative to being just kind of a tidal wave washing over them from currency devaluation. Second thing that we're solving. The United Nations has a term for those of us that don't have access to basic banking services, not even the broader financial services like you're able to provide, but absolute just basic checking or savings account. And the United Nations calls that the unbanked or the underbanked. Now, there's 1.2 billion people in the world with a smartphone, more technology in their pocket than what NASA used to put a man on the moon, and they don't even have a bank account. They don't even have access to one. So this is ridiculous. And again, we tend to think as Americans, we always, we're a little insulated in our own bubble in America. Let's admit it. We think of these things as like, okay, well, that's a problem in Southeast Asia or Africa or Latin America. 1 out of 5 Americans are classified as unbanked or underbanked. So it's a huge part of our own US population. So it's a very real issue. So we believe that there's a solution to that, to get that technology and to get basic services to be able to save and transact to more people and to do that more effectively and much broader. Third point is that when you get into international payments are still very expensive. They're on average 8% worldwide to send money across a border. But the tragic part of that is that that's an average. That's counting even the very large commercial transactions. When you look at the smaller remittance market, like when a farmer that's come across the border from Mexico legally to work and send money back to his family in Mexico, he might be paying as much as 20, 30, 40% in fees to send that money home. And this happens all over the world. Now, remittance markets are huge. Just the transaction volume from the United States to Mexico annually is about $24 billion and an average send of only $200 at a time. So these are folks that deserve better. They are working hard. They're the ones that help provide and nourish us through the hard work that they do. And they're being punished the worst without the safety and security of financial institutions and better transaction costs. So that's the third piece that we're solving. And these are all mission points for what Coro is about. And so we do that through combining, there's really the heart of what Coro does is that we use a very advanced technology, which is called Hashgraph. And I can touch on some of the components of that, later in this conversation, if the audience is interested. But in a nutshell, Hashgraph lowers the cost and it makes sending transactions instantaneous. Most people don't realize that it can take many days to send a transaction from one country to another. It can even take hours just within the United States. If you send something by ACH, it's up to 3 days. Even if you send a wire, if you sent me a wire in the morning, I probably won't receive that until maybe later in the afternoon. It's not instant. But what we do with Coro is it's instant, and we give people the ability to transact in physical gold. So you can save your money in physical gold. You can send it in gold. You can buy as little as $1 worth, $100 worth. So you actually have a safe, stable unit of account, whether you're using gold, dollars, Mexican pesos, whatever it is.
Wow. Sounds like you're solving some really huge problems there. With 3 of them, I mean, that's a great approach there. We do have a lot of people in our group that are kind of interested in crypto. So let's take a little minute here, a couple minutes here, and talk about that. I don't really get into that stuff. So I thought that since you're here, you could talk a little bit about what you think about crypto and that whole thing, and how you're different from that. Yeah.
Yeah, so as you know, Kenan, from some of our earlier, private conversations, I've got some strong opinions on it, right? So here's the thing, for the audience, I understand the enthusiasm around crypto, but the real reason you guys are enthusiastic, which is a philosophy I share, it's because there's a growing distrust of our large financial institutions. Bitcoin was born out of the last financial crisis. And there's a distrust about being able to maintain your privacy and independence with your money. You want something that's stable. You want something that's secure. You don't want the government interfering in your life or trying to take your wealth. I get it. I support every single aspect of that. That's why Coro exists. But we'll get into the difference in a moment. Here's the thing to understand about crypto. I'm going to unpack this in 2 components, as simple as possible for everybody to understand. First of all, let's use Bitcoin, most familiar to everybody. That's kind of the king of cryptocurrencies. And what is Bitcoin trying to do? Bitcoin's trying to beat digital gold. And if you doubt that, I want you to go type into Google, type in Bitcoin, click on the image search, and tell me what it looks like. Every single one of those photos looks like a gold coin, okay? So Bitcoin is trying to beat gold. And they even did it all the way down to the algorithm, which replicates kind of the mining rate for new gold entering the market. Now, Bitcoin was a really clever solution to a complex problem. That complex problem is, how do you get a bunch of computers to sync up if they don't trust each other? How can you get all that data in the same place and create basically a safe, trustless network? You don't have to trust somebody else on there to know that something will go through. But here's the problem. Let's look at Bitcoin first in comparison to gold. So Bitcoin is money. Does it really meet the tests of money? And then we'll look at Bitcoin as a technology. And I'm going to point out some of the key flaws for you guys to really be aware of. This is super good education. So Bitcoin is money. Let's start there. Money needs to be a unit of account, store of value, and medium of exchange. It must check all 3 of those boxes. Medium of exchange, unit of account, store of value. Now, with Bitcoin being gold, if it's going to be digital gold, it needs to have some scarcity to it. There must be a barrier to entry. And we know that there's a limited number of Bitcoins. Guess what? There's a limited amount of physical gold. But here's the difference. Here's what everybody just kind of glazed past and they didn't think too deeply about. The difference is as follows. Gold is an actual element on our periodic table. It is actually something that physically exists in the real world and has a physical scarcity to it. Now, why does that matter? Because unless we get hit by a meteorite that introduces some sort of new precious metal to the periodic table, there's a real barrier to entry. You've only got 4 main precious metals: gold, silver, platinum, and palladium. Now, while there's a limited number of Bitcoins, there's absolutely no barrier to entry for other digital currencies to be created. And what have we seen over the last 10 years? Nearly 100,000 different cryptocurrencies created. How many of those cryptocurrencies are worth anything? Practically none of them, right? Because of that very, very serious flaw. So in that regard, it's not going to function. You can't have something if there's no barrier to entry for the competition there. So gold wins in that basis, and plus gold something actually physical, tangible that you can touch. Now, the second component is getting into the tech. Okay, so I'm going to educate everybody here on how the technology for Bitcoin works, because to me, this is one of the biggest scams being perpetrated in the market right now. Everybody that's promoting Bitcoin exchange and Bitcoin currency and even all the big institutions, they're completely ignoring some very key pieces. Bitcoin is technically two technologies, okay? It is Bitcoin with a large B, which represents the blockchain. That's the ledger where transactions are securely recorded. Okay, so when we hear about blockchain, that's what it's talking about. But glued to that is the token. So when people talk about the price of Bitcoin, what they're talking about is that token, right? The price of Bitcoin, one Bitcoin versus dollars, and you have that. Okay. Now, what's incredibly important to understand is that with this early stage version of blockchain, there's no way to use the ledger without the token or the token without the ledger. Now, at first glance, to many of us, that might not seem like any type of obvious problem, but I'm going to show you why it is. Let's use two examples of where you would actually want those things completely separated out. You don't want to have to use that token as a key to turn on the ignition on the ledger. So let's say that I'm FedEx, and I can appreciate how valuable it would be to track packages on the ledger. Okay, that makes sense. This is why there's so much hype around ledgers and applying those in different business sectors. Do I want a token? Nope. For what? Why would I want a token? I want a clean accounting record. A token just runs interference, okay? Now, let's jump to the other side as money. I want you to imagine, we all have, most of the audience, I presume, has got debit cards, right? So if you bank at, let's say Wells Fargo, for example, and you walk across the street to pull out money from a Chase bank ATM, that ATM is a network, very similar to a blockchain, right? So it's a network effect there. Now, if you put in your debit card and you said, I want to withdraw $200, and the ATM instead spit out $140 or $370 because of the fluctuation of the network, you wouldn't be a happy customer. That would be just unacceptable. It would be dysfunctional for you. So you never want a network to impact the cost of your money. You never want your ATM to have any sort of anything to do with your money other than giving it to you, right? You pay the ATM fee, now give me my money, right? Don't impact my money, just give me my money. Right. And nobody talks about this. Now, you can see this extended. In addition to that, Bitcoin's dreadfully slow. It only transacts at about 3 to 7 transactions per second. Now, to put that in perspective, Visa and MasterCard transact at 25 to 35,000 transactions per second. So this is just ridiculous. And Bitcoin is slowing every day. Now, the last piece to take away from this, to prove to you that this ledger doesn't work, and this doesn't mean this is not a critique of Bitcoin, it's a critique of the people that are promoting it without being honest. It's that Bitcoin was a good technology 10 years ago as a first step, but they're like VHS cassette tapes when we got high streaming definition TV now. You just don't need it. It doesn't serve you, right? So when you hear about Bitcoin, like all these people that are transacting on Bitcoin, PayPal, Square, Coinbase, all these systems, 99% of Bitcoin transactions take place off chain. What does that mean? On chain means it's recorded on the ledger, which is the whole point of having it. If you can't record a transaction on the ledger, then you have a problem. So there's a difference between separating the ledger and the token and recording on the ledger. So the ledger is too slow to do it. That means that 99% of these transactions are off-chain. They're just debits and credits in a centralized system, just like today's traditional banks. So it doesn't do anything. So this is completely, utterly pointless. So that's a quick...
That sounds like lunacy to me.
It's completely lunacy. And that doesn't even get into the fraud of Tether and these other stable coins that have been mathematically proven to show the manipulation in prices with Bitcoin, which is a whole nother thing. Everybody just go Google Tether and the word fraud, and you're going to just see tons of stuff. The New York Attorney General is suing them. There's 18 billion tethers, which are probably not backed by anything. 18 billion wow. Impacting Bitcoin prices. The majority of Bitcoin is traded on this stable coin, which is called the Tether, which is supposed to be 1 Tether equals $1. And they've never done an audit. We know there's hundreds of millions of dollars missing. They also own exchanges where they flush this stuff around. It's a Ponzi scheme. Wow. So everybody beware. Just now you have the education, and what you choose to do from there is your own. If you want to speculate on it, make sure you risk proportion that very tiny so that you're not going to have to sell your house if your trade goes wrong.
Bring your crap mentality, right?
Yeah,
for
yeah.
doing
Treat
that.
it as one roll of the dice. Don't treat this as as a key stake in your portfolio.
Yeah, yeah, absolutely. And so you guys are doing, you guys have combined. Let's talk about how, you've kind of evolved, you know, what the blockchain technology that has come out, which is going to impact a lot of things. I've been hearing about how it's going to
Yes.
impact a lot of different things, and you've come up with a way that seems to be pretty innovative in the way you're using it.
Yeah, this is really cool. So like I said, Bitcoin was a good first draft. And when we saw those flaws in it, we said, well, we're not computer scientists, but like all tech, it's going to improve. Now, here's part of what's been missing in the dialogue about crypto, and this is how we resolved it. First of all, everybody got religious about crypto and the whole philosophy because the passion for it, that philosophy that we're all aligned with, is very powerful. We all want more freedom. We all want more protection. We want better savings. But if we were to talk about technology evolving in normal conversations, that's not a debate. Kenan, if I said, hey man, you pull out your mobile phone, I'm going to pull out mine, everybody in the audience pull out your phones, and we're going to determine in about 5 minutes who's got the best mobile phone. Why? We'll get on Google, search, and see the specs. Your camera's better than mine. Somebody else's operating system's faster. In about 5 minutes, we can figure out who's got the best phone. Technology is not really disputed as far as who's got the best stuff at any given time, right? You can look at the
Right.
specs. It's a pretty honest conversation, but that's missing in crypto. And this is part of what I want people to wake up to. That they're missing that. You have to do your due diligence and really understand that tech's always evolving. So there's been huge leaps forward since Bitcoin came out. And what happened is that here's the way to think about it. The term distributed ledger technology, DLT, is used interchangeably with the term blockchain, which Bitcoin was the first there. But that's not exactly accurate. Blockchain is just a branch of distributed ledger technology. Bitcoin, Ethereum, Hyperledger, all these networks. There's many, many different variations now, and many have improved along the way. They do some really cool stuff. But several years ago, there was a new branch that evolved. And this other branch underneath DLT is called directed acyclic graph. And we use a very specific form of that, which is called Hashgraph. It's patented technology. It was invented by an absolutely brilliant American computer scientist named Dr. Lehman Baird. And your audience can get on YouTube and see his lectures. He's mind-blowing. He is a truly verifiable Einstein type guy. And he had his Einstein type moment, an E equals MC squared type moment. Absolutely brilliant, where he created this mathematical algorithm that solved a lot of the previous blockchain's problems. So what is Hashgraph, what we use? What does it do that the other stuff doesn't? And why should we even care? Number one, blockchain only reaches consensus probabilistically. Now, I like putting these things in human terms. I'm going to presume we don't have an audience full of computer scientists. I'm not a computer scientist. No. So let me make this relatable. Most people have probably had the experience using Dropbox, Microsoft OneDrive, their iCloud. We all depend on cloud storage services now. And the beauty of blockchain and DLT is that it's kind of like the cloud on steroids. Instead of just being backed up in a couple big data centers, it could be scattered into a million different places, cryptographically secure. So if that's the case, what really matters is how do all those data points get synced up, right? So using Dropbox as an example, if Dropbox was syncing up probabilistically and it's only 99% accurate, it'd be like your Dropbox deleting 1% of your files randomly.
Oh, no.
Well, you wouldn't be too happy about that. Now, if you take something like the New York Stock Exchange that has very high billions of dollars traded every single day, and 1% of those trades went off the rails or couldn't be verified, you wouldn't have any trust or faith in the NYSE as a financial institution. So this is part of the dirty secret about blockchain that nobody wants to really talk about. That's a problem. Now, when you work in my sector, financial transactions, look, if you're selling crypto kitties, who cares? Not really a big deal. If you're doing high value, if I'm responsible for customer money, I'm responsible for making sure it's there. And if they want to move it from point A to point B, that goes 100%. So Hashgraph is the first algorithm that's independently mathematically verifiable to reach consensus 100%. That's a huge breakthrough. That's a very, 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 very key component.
Wow.
The
100% consensus.
100% consensus, mathematically verifiable. So
Wow.
no 99%, no 99.9%, 100%.
Wow.
Crucial. It seems like a small thing, but that 1% difference, as we like to say, that 1% difference is all the difference. You want 100%. Now, the second component, for those that have discovered Hashgraph, and that's a growing number of people. Even in the last couple of years, on Hashgraph's board sit some pretty fascinating companies. Google, IBM, Boeing, Tata, the international law firm, DLA Piper, LG, and many others. So I'm very proud that my company is the first in the world to license Hashgraph, because we were on this very early, watching for these types of breakthroughs. Yeah, we're first in the world to license them. Something we're very, very, very proud of. And first to commercialize a private permission network run on Hashgraph. Again, something is world first. So the people that do know about Hashgraph, and as the audience is listening, what Hashgraph is also known for is it's kind of broke the speed barrier. Earlier in our conversation, I was referencing Bitcoin only doing 3 to 7 transactions per second. And audience, here's how you can think about Bitcoin. Let me just throw some more mud on Bitcoin, since I'm going to just do that all night. But here's another thing. If I came to your house and I said, listen, I've got a new internet for you, new internet connection. I want you to sign up. But guess what? Each month it's going to be more expensive. Your bill is going to go up each month, and your internet speed is going to go down. How many of you guys are going to sign up for that? Nobody. Okay, so stop signing up for Bitcoin, because it's the same thing. It's actually mathematically programmed into their algorithm to do that. So not a good proposition. So the speed, as I mentioned with Visa and MasterCard, is 25, 35,000 transactions per second. So if a distributed network can't match existing commercial speeds, that's its first hurdle. Like nobody wants to go backwards. We want better tech and at least comparable speeds, if not better. Well, Hashgraph's capable of speeds upwards of 500,000 transactions per second, nearly 2,000% faster than Visa and MasterCard.
Wow.
That's why we say one of our big advantages with Coro is when you send money from one person to another, it's like that. They receive it. There's no delay. Even with platforms like Venmo, that's not always instant. I might come over to your house, Kenan, and say, hey, man, I like your mountain bike. I'm going to send you $500 on Venmo with it. And I run off and I ride off with the bicycle, and then I cancel the transaction. And because it can take time, it can take up to 45 minutes sometimes to settle. Now I got my money back and I got your bike. Well, that's never going to happen with it. We're not designed that way. Right. If I send you money on Coro, you have it. That's the end of that transaction, right? Okay. So the speed's important. Now, the last piece is the cybersecurity. Now, Kenan, you know I'm a cybersecurity freak. When people ask me what my number one concern is about the company, and we work in a very complex, highly regulated space, what keeps me up at night is cybersecurity, constantly. And just in the news, since I talked to you the other day, you might have seen FireEye, huge cybersecurity firm. They provide cybersecurity for governments, nation states, big corporations. They got hacked. Oh my God. So when you got the best in the world being hacked, we got to pay attention. That's one of our big macro themes. Cybersecurity is something that's going to get exponentially, it's going to compound getting worse. So we got to be vigilant. Well, Hashgraph wins on that too. It is the most cyber secure DLT out there. It reaches the gold standard, which is called asynchronous Byzantine fault tolerant. And I won't bore people with what that is. You can Google it, but that's, you can take my word for it or look it up. But that is as strong as you can get in a distributed network. And then last but not least, the reason we like Hashgraph, it's energy efficient. Bitcoin is using, here's my last sling of mud, I think, for Bitcoin. Bitcoin is using more energy than many small countries, and getting worse. This is stupid. We don't need to do that. That's not sustainable. That's not good for the climate. It's just wasteful. Well, one of the things that Hashgraph broke away from was any of this need for mining. There is no computer mining. It's extraordinarily lightweight. You could literally power it off a network of mobile phones. And so for that reason, that's why we bet on Hashgraph as our underlying technology to marry with physical gold. And so we're the Bitcoin killer. We're doing what Bitcoin set out to be, digital gold. We're like, hey, listen, you can have your cake and eat it too. I'm going to give you real physical gold, and I'm going to give it to you on a network that just completely blows the doors off Bitcoin. So that's our value prop.
Man, that's amazing stuff. I mean, you guys, this is a lot of firsts here for our group here. And, you know, we've got David here and we're coming up on 7, a little bit past 7. So, I mean, this is just great stuff that he's been dropping. He's the co-founder. David Dorr, my guest, is the co-founder of Coro Gold. Coro Global, I'm sorry, which is a well, you just heard what it is, but they transmit physical gold and payments and things like that on a cryptographic network. So is that a good fair assessment there, David?
That's a perfect description. That's exactly what we do.
Yeah. So pretty amazing stuff. And I've had a chance to get to know David over the past couple of days. We had a conversation yesterday, and I mean, he's a very innovative and maverick entrepreneur, and very experienced. So we are very fortunate to have him. I will, if anybody's live and has a question, go ahead and post it in the chat. I will, just hang out here for a minute with David, and we'll just chit chat a little bit on some other topics. If anybody does, I see there's a couple of people live. I don't know if you're there. You want to have a question answered, let me know. So we'll just hang out here just for a little bit longer, sure. And I'll let David go after that. So yeah, this has been such a great conversation. I mean, it's so important to pay attention to these macro trends that are happening. I mean, with the technology, number one, that's a huge one. I mean, just to get an education, I'm not super up on the current technology, but just talking with you, I feel like I'm like light years ahead of, right. of everyone, at this point. And then having I've always had a understanding of the precious metals. I've been kind of a person who has collected coins. I got started back in those days, and this is a lot different from that. And I've seen how different technologies have come about in that space, and this one seems to be like nothing I've ever seen before. So I definitely wanted to spend some time with you and share this with the group here. Let's see, there is a comment here. It says Mariko Walker says great information. So so it doesn't look like we have any questions, but this has been awesome. And do you want to say anything to wrap up here? How can people get in touch with you and sure. follow your company and things like that?
Yeah, so two things. I'll leave the audience with a visual about gold that I think is very powerful, from an educational standpoint. One of the things we like to say about gold is that, if we all teleported back to the Roman Empire, 1 troy ounce of gold would buy you one of the nicest togas and one of the nicest dinners in the city. 1 troy ounce of gold today, in pretty much any city in the world, will buy you one of the nicest suits or dresses and one of the nicest dinners in that city. And so this is really a testament to gold maintaining its purchasing power over time. And that's why we're so committed to make sure everybody's got access to that. You don't need to be rich, anything like, we want our communities to be able to rebuild with something that's trustworthy between us. And we can't trust each other in society if we've got something that's eroding when we're trying to conduct any type of trade or service. So it's really important to bring that back. Last but not least, you can find information about our company. It's just go on the web. It's coro.global, coro.global, super easy website. And you can go on our site. We are now licensed. We're federally licensed in the United States, as well as licensed in 20 states. We'll be across the entire US probably by the end of the first quarter of next year. So go on our website, and if we are licensed in a state where you live, you can download our app. It's completely free. There's no cost to download it. We'd love to have you as a customer. Jump on board and treat yourself to some gold, and then share it with your friends and family. It makes a great Christmas gift.
Yeah, I plan to be giving some stocking stuffers, with mine that I've got. So I'm excited about it. Thank you, David, for taking some time and spending it with me and sharing your insights with the group. I know they're going to get a lot out of it. It's probably dinner time for a lot of people, so people getting off work. But as they'll come on, they'll get viewed probably 300 or 400 times over the next couple of weeks. So so I appreciate you, and thank you, everyone. I'm going to stop the live here and sign off here. So thank you, everyone. Financial Literacy for Beginners. We've got another Facebook Live next week with another guest that you're going to love. So be sure to tune in next Wednesday. All right. Thanks, guys.
Cool, man.
Yeah.